Oil prices are rising, but that doesn't really affect my stocks directly, right? It already has. You just haven't seen it yet. Because when oil rises like this, stocks don't fall immediately, they fall after you get comfortable. Stay with me till the end, because in the next few minutes, I will show you exactly how oil silently destroys the portfolios and the specific sectors that just get hit first. Most investors miss this and only realize it after the damage is done. Most people think oil is just another commodity, something that affects the fuel prices and nothing more. Now that's the mistake. Oil is not a sector variable, it's a system variable, which means when oil moves aggressively, it doesn't impact one industry, it impacts everything. And that is exactly what is starting right now. Let's break down what actually happens when oil rises. Not theory, real impact. First, the cost explosion. Transport, energy, raw materials, everything becomes expensive. Companies start spending more without earning more. Second, margin compression. Cost will go up, so profits will shrink. And when profits shrink, stock price adjusts. Third, inflation shock. Higher oil price means higher inflation. Higher inflation means higher interest rate, and higher rates means lower valuation. So even strong companies start falling. When oil rises like this, you're not holding safe stock, you're holding exposed positions. And this is where it gets dangerous, because some sectors don't just fall, they get hit first. If oil stays high, these sectors are directly exposed. First, airlines. Fuel is the core cost, so margins collapse fast. Second, paint companies. Oil based raw materials, in input cost will spike, so that will put pressure on profits. Third, FMCG. Transport and packing cost increases, slow but consistent margin squeeze will happen. Fourth, cement. It is logistics heavy. Fuel cost directly impacts the profitability. But here is what most people miss. While some sectors suffer, others quietly benefit. Markets don't destroy money, they rotate it. So when the oil rises, money shifts into energy companies, commodity business, and oil linked sectors. These companies gain pricing power while others struggle. This is the difference between reacting and positioning. So the real question is not, is the market falling? The real question is, are you positioned correctly for this shift? Right now, don't react emotionally. Do this instead. First of all, check which stocks in your portfolio are oil sensitive. Second, don't add aggressively to weak sectors. Third, track oil, not just the index. The biggest loss in markets don't happen suddenly. They happen when you think nothing is wrong. Right now, you still have time to adjust. But once the impact becomes visible, the market will have already moved. If you understand how oil moves the market, you won't just protect your portfolio, you will be positioned before the next move begins.